Good morning and welcome to the VSA Morning Miner. It's Tuesday, the 21st of March. I'm joined by Paul Rankin. Paul, how are you today?
I'm pretty well, thank you. How are you?
Yeah, not too bad, thanks. Although it looks like quite a quiet morning as far as mining RNSs go. Not too many companies in our space with material news out there. Should we start with the ones that have, and then perhaps we'll talk a bit about the gold price at the end. East Star Resources, one that you've been following for a while, Paul. They've had an RNS this morning, haven't they?
Yes, they sure have. They have released a exploration target size for their Rudny Altai VMS project there in Kazakhstan. Key point, I think, to bring about bring up for investors there is that there is an awful lot of drilling data already on this project that's historic, however, in nature, and probably has gaps in it as far as its eligibility for a compliant quote at this time. So therefore, they can't post it as a resource yet at this point, but they have otherwise put a target size on it of 19 to 23 million tons, grading in excess of 1% copper and 1% zinc. And that target already has 97 drill holes and 42,000 meters of drilling in it already. So therefore, going forward, what E-Star would simply do is do some infill and verification twinning holes, I'm sure, in order to confirm that what the historic data was showing is in fact what the thicknesses and grades would otherwise be and if they survey in or can survey in much of the historic drill hole data as well, then they would be able to put a compliant resource around that in due course without too much difficulty, and otherwise not have to duplicate all that historic information.
Yeah, it looks pretty sizable and reasonable level of certainty, as you say, but it can't be a compliant resource yet. We have seen issues in the past where companies, particularly converting from Russian standards C2 type reserves and resources, have had quite a significant level of variation when converting into JORC.
And I would also add too that more than likely, given the historic nature, it was targeted because it was so close to surface, the evidence of mineralization. So I suspect that this is also a potential open pit situation as well.
Yeah, but not quite there yet. So still some risks to be unlocked when they do their own drilling and take it up to compliant modern standards. Also some results from Panoro Minerals.
Yes, Panoro, we haven't talked about necessarily before or anytime lately. TSX listed, working on the Cotabambas copper, gold, silver project in southern Peru. Several drill holes announced here, of which I highlight particularly two of them. They were working on moving inferred resources to indicated at Cotabambas, and also to find extensions at depth and along strike to the northeast. That they appear to have done with drill hole 15, for instance, that came up with 114 meters including of mineralization, including 55 meters grading 0.53% copper. And this was an intersection over 250 meters below prior mineralization mentioned before. And then they also cover another one I would highlight is hole 213, which has two intervals in it. 155 meters of mineralization and 107 meters of mineralization, all in this number here, around 0.6 to 0.8% copper, as well as recoverable amounts of gold and silver in significance. So those two very encouraging that the Cotabambas property will be growing in size.
Yeah, very good. Okay, we'll be following that. So yes, gold price yesterday morning in early Asian trading went through $2,000 an ounce, but couldn't quite hold on to it. So it's now dropped back from that, I think, to about 1970, maybe slightly lower than that, 1965. And there's obviously a lot of attention on gold stocks. They had a good trading day yesterday, jumped quite strongly, but the equities are extremely cheap, and there is a massive divergence between the performance of the GDX gold miners index and that of the gold price over the last few months.
Yes, and I think the move was precipitated by the action over the weekend, which essentially brought UBS Bank in to take over Credit Suisse Bank there in Switzerland. And what caught investors in Credit Suisse or Credit Suisse debt off guard in this arrangement that was agreed by the regulator is they the regulator forced the write down to zero of $17 billion worth of secondary or subsidiary AT1 debt. And that debt, otherwise in bankruptcy proceedings, would be just above the equity shareholders as far as its protections under bankruptcy or administration rules. So the fact that debt holders are also being written down to zero in this particular arrangement is significant, in that Credit Suisse being what is considered a systemically large global bank, so that it puts an added level of uncertainty around even the debt component of systemic banks. And I think that's probably supportive of bullion as far as insurance or protection against such events.
Yeah, I think the FOMC meeting that's coming up in over the next week or so is going to be pretty key for the near term gold price. There's quite a few technical analysts who are looking at a pullback down to the sort of 1900s, or maybe slightly lower than that. Trigger for that would obviously be a further rate rise, which there has been some indication from the Fed might be necessary. But given the stress that clearly the pace of the rate hikes already has caused on the system, the counter to that is that they need to slow down and potentially reverse some of the initial hikes. That would obviously be very positive for gold, and I think we'll probably start to see some cuts later in the year, perhaps as early as Q2, and that would be very positive for gold. I think if you then get a sustained breakout above $2,000 an ounce, that then enables the GDX to catch up. But at the moment, I don't think that is pricing that in. It's probably more likely to be pricing a bigger fall in the wider equity markets in, as gold miners are equities, not the gold price itself.
Yes, that's right. That's right.
Okay, Paul. I think we'll call it a day there, and we'll be back tomorrow. Thanks very much.
You're welcome.